Good morning and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the key market events that are currently moving the markets. We will try to understand what are the key market structures, and from there, hopefully everyone will be able to trade from an informed perspective. So once you join in, kindly say hi on the live comment section, and this will inform me that everything is working just fine. So I would like to begin with a disclaimer that this session is particularly not investment advice. It's not a recommendation to trade. So you should always do your own due diligence and practice proper risk management. So good morning, Fathili Kapsali. You can see Thomas Mashuma, J Squad. There is Jem Karaoke, Carol. Thank you guys for joining. So let's jump straight into the economic calendar for today. So from the economic calendar today, you can see that Thursday, the 8th of August, we don't have much happening in the markets. So earlier on, we had the speech from Reserve Bank of Australia, Governor Bullock at 5:40 a.m. Then we had the inflation expectations quarter over quarter from New Zealand, which moved lower to 2.03%, closer to the central bank's target compared to the previous expectation, which was 2.33%. So going forward, the main data points for the day will be the unemployment claims, which previously were at 249K, and we're expecting a data point of 241K. So as I've always said, whenever you see the unemployment claims, you should know it's a weekly data point. So the key concern for the Federal Reserve Bank of the US is whether the unemployment claims are increasing or dropping. Right now, over the last couple of weeks, I would say since around the January 18th of this year, unemployment claims have been generally rising up. So from this bottom, we have seen progressive increase in unemployment claims, which basically shows that the unemployment is increasing in the US, and basically shows that the labor market is softening, which pressures the Fed to go for a rate cut in the next meeting, which is expected to be happening in September this year. So whenever you see even more unemployment claims increasing, these are people who are filing for unemployment insurance, people who are skilled, they are looking for jobs, but they can't find any. And if this number keeps on increasing, then it shows the dire situation in the US economy. So in this case, we'll be looking at a higher number. If there's a higher number than 241K, then that should indicate that we are going for rate cuts, and in that case, a much weaker dollar. So on the other hand, if the unemployment claims are lower than 241K, then we should be seeing a strengthening dollar. So later on in the afternoon, we'll be seeing the natural gas storage data, basically showing how much natural gas increased or reduced in the US storage. So in the previous reading, there was an increase of 18 billion. So in this case, we'll be expecting to see 22 billion. A much higher increase means that there is higher supply, lower prices. And of course, if there's much lower supply, then we expect to see higher prices. So we'll be looking at the 30-year bond auction and then a speech from FOMC member Bakin before we end the day and head into Friday, where we'll be having the CPI data from China as well as the Canadian job data report. So that being said, we know that what's basically moving the markets is the JPY carry trade. So this is something we discussed extensively on Monday. So if you didn't go through this, then I would suggest that you go back and check from YouTube as well as Twitter the session that we did on Monday describing the Japanese reverse carry trade. So on the session, we covered quite a number of things. One of them was how the reverse carry trade is expected to affect the markets. And just to give a highlight, from the JPY carry trade, we expect that if the Bank of Japan continues hiking interest rates, then it's going to lead to a much more stronger Japanese yen. And at the same time, the Japanese stock market may collapse, especially the Nikkei 225 index. On the other hand, we have seen how it's affecting the rest of the market. we have seen big sell-offs happening in the SP 500, the Nasdaq, and the Dow Jones, as well as European equity indices. So as the title of the session suggests today, we are looking at US and EU equity indices continuing a sell-off after a dead cat bounce. So a dead cat bounce is a scenario that happens in the markets whenever there's a big jump in the markets, prices moving downwards. So you see, I would call it a bearish trend. So a big bearish trend followed by a small short-term bullish trend. So some people may refer to this as a bull trap. Sometimes it's called a dead cat bounce, where after a big drop, you may see prices rising rapidly and then the drop continues. So it seems like the current situation that we're experiencing is a dead cat bounce, where after the big sell-off on last week and then on Monday, we saw prices recovering on Tuesday as well as Wednesday, and then towards the evening on Wednesday, we saw a large-scale sell-off, largely continuing the prevailing trend. So if you're already in the session, remember that if you have any questions, feel free to type them in the live comment section, and these will confirm that everything is working just fine. So hello, Carol, Jisaproki, thank you for joining. I can see Hilary Kimtai, James Kamau. There's a good request to check on Euro Audi currency pair. Wangari Patrick, Jason, and Francis Warui. Thank you guys for joining, and thank you for your comments and requests. So if you're watching this on YouTube, feel free to basically ask your questions, like and share the video. If you're watching this on X or Twitter, feel free to like and share the video. I would really appreciate this. So let's get on to the next point. What are the key highlights in the markets for today? So, well, there's quite a number of things. Of course, if you go to the news website, you will see more politics about the US campaigns as they head into the November elections. Of course, the main headline on Yahoo Finance is Newman, Harris and Trump would both make debt worse. However, a key highlight I would like to show you guys is on this article on Reuters, republished in Yahoo Finance, talking about the analysis, Bank of Japan's communication about phase may hound future rate moves. So the Bank of Japan managed to calm investor nerves during global market turmoil this week by reversing a calibrated strategy to communicate steady interest rate rises, but the free flop tests the bank's resolve to face out decades of radical stimulus. So if the central bank, scarred by missteps and reversals going back a quarter century, is at the mercy of markets, it may be constrained in moving away from what it has called extensive support for the world's fourth biggest economy. So the yen spiked and Tokyo shares plummeted last week as the Bank of Japan unexpectedly raised its policy rate from essentially zero to the highest in 15 years, and Governor Kazuo Ueda signaled further steady rate hikes, a path the central bank had been trying to suggest for months. So in this case, what we are seeing is even more increases in the Japanese interest rates, causing more havoc in the markets because the world was majorly leveraged based on credit from Japan. So if credit from Japan becomes more expensive, then repaying those loans might become more expensive as interest rates increase. And when you combine this factor with what's happening with the Japanese yen, which has been strengthening against other currencies, then in this case, we might be seeing a reverse of the carry trade, basically leading to even more sell-off in the US as well as European equity indices. So that's the big news of the week, and we should be expecting to see more from this. So right now, as after we saw the sell-off happening last week, we could be seeing a continuation of the same happening this week. So let's get on to some more technical analysis. Last paragraph I highlighted here. Ueda's influential deputy helped stabilize sentiment on Wednesday by saying the Bank of Japan would not raise interest rates when markets were unstable, but confusion resumed on Thursday when a summary of the discussion at the bank's July 3031 meeting showed policymakers forecast on a series of rate hikes to keep inflation from overshooting. So as we all know, the Bank of Japan is currently mandated to keep prices stable in Japan. And by keeping prices stable, it's looking at hiking interest rates. And at the same time, Japan has been suffering from the current increase in oil prices as a result of what's happening with their currency. So as their currency continues losing in the global markets, then oil prices continue increasing. And Japan, being a major importer of oil, they really need to strengthen their currency in order to get into a stable level where import prices are much lower. So with this facing the economy, I don't think they care much about the global economy, knowing that they have to save their own. So I'm seeing even more comments. Francis Waroi, Trapsked, thank you for joining. J Squad, there's quite a number of comments coming in. One of them, what's the most promising pair to trade today? We'll be looking at that. So is the sell-off over, or are we only getting started from the carry trade? So as I said earlier in the week, the carry trade is currently a big position that has accumulated over time for more than 15 years. And now we are seeing the reverse of the carry trade. There's no way that this carry trade could be unwound in 24 to 48 hours. So there's more to come in the markets. Thank you for joining. Hopefully, we'll be able to identify these as we proceed. So I can see Bridginda Agencies in the house. Thank you for joining and good morning. Hello, Patrick John. Good morning. So let's continue. So what we are looking at is the MetaTrader 4 trading application. This is the platform that we majorly use to trade. So we have a mobile app called the Equity Trader. You can download it from the Google Play Store as well as the Apple App Store. So the dollar index made quite an important recovery on Monday afternoon, followed by Tuesday bullish momentum, and then Wednesday further bullish momentum before weakening and starting to move downwards. So yesterday, after the London session, we saw the dollar index beginning to weaken, and today it has continued with a reversal, which basically implies that what we saw over the week was more of a dead cat bounce. And a dead cat bounce is when you have a big sell-off, the market bounces strong, but then eventually continues with the bearish momentum. So if you look at this strong bearish momentum, then this followed by some further bearish momentum. From this high, the market makes a big drop here. Then this is what we may describe as a dead cat bounce, especially if the prior bearish momentum was very strong. So now, this week, we are seeing something similar, market making a very strong bounce from our prior bottom. And now we might be headed for yet another big sell-off after hitting that previous high. So in this case, we might expect to see the dollar index continuing to weaken. And if this plays out, then we have some positions to be looking forward to. So for instance, if you are a Euro USD trader and you know what has been happening in this market, then you know that this was a major resistance area in the previous cycle. So the market was moving upwards, found resistance here, moved downwards, and then up, faced resistance here, moved back before breaking, and then eventually broke the resistance, which basically made the resistance level now a support. So now looking at what happened here, the market pulled back downwards, found support at the area, and now we are seeing the market moving upwards. So on Tuesday in the afternoon, I had described this as a potential bouncing point, and I expected the market to bounce from here and head to the previous high. However, this did not play out as expected. So the market moved up for a while, then pulled back to the same level, and now we are seeing the progression where we have basically today broken yesterday's high, as well as this attempt to move higher on Tuesday. So now the expectation is much better that the market continues with a bullish momentum and eventually gets back to the previous high. So for the dollar trading against the Swiss franc, the bullish momentum was the same, a very strong attempt to move higher. So now we are seeing an attempt to potentially break the lower side. So if for the last 3 days, this has been the observable trend line, then the market is on the verge of making a breakout to the lower side. So this is the area we are observing here. So we don't know whether there will be a breakout and whether there will be a bounce towards the upper side. But then the chances are likely that the market will break this and head lower. So we should be looking forward to see the progression that happens later in the day, with a focus on yesterday's low being a target if the market breaks this lower trend line. So for pound USD, we are seeing the same channel being extended, which has been pretty bearish, indicating that the pound has been weakening against the dollar. So now extending my trend line here, you can see that the pound is basically finding support along the lower trend line and is now on the verge of bouncing and heading towards the upper side as the dollar takes a step backwards. So in this case, there's a more likelihood that we should be seeing the pound making a rally and getting to the upper trend line, a price level which is around 1.27579 as the channel continues, where the pound has been weakening against the dollar. But in this case, it's the pound now looking to strengthen against the US dollar. So for the USD card, we had seen a big breakout happening on the upper side. We speculated on Monday that the market would potentially change direction and head all the way to the bottom here, which played out as expected. So on Tuesday, market moved up. We expected that this would serve as a strong resistance and the market would drop here. So these played out as expected. And now on Wednesday, we had a continuation of the break. So there's a familiar pattern here. I know most of you guys have been who have been attending these sessions know that whenever you have a breakout, sometimes you may expect a retest. So the retest played out as expected here. Market broke out, retested the support area, and now continued with the bearish momentum. And now we are seeing more of a sideways momentum. So in this case, I would expect nothing much from the CAD or the Canadian dollar. So what we are seeing here is more of a triangle formation. So just give me a sec. So from yesterday's price action, it doesn't seem like the trend is continuing. So it's more of a sideways momentum where we are basically seeing resistance being along this line, support being along this line here, and nothing much happening in USD CAD. So for this one, it's pretty interesting, knowing that at some point we could be seeing a breakout. So when that breakout plays out, then that might make sense to be looking for a position in USD CAD. So if the dollar continues being weak, then a breakout of this area might be the trigger for a bearish position. So AUD-USD, after trading within this channel, managed to break out, retest, and continue. So in this case, for the day, we should be looking forward to further bullish momentum from AUD-USD moving even higher. So if you zoom out, you'll notice that there is quite a number of levels that we have been experiencing on AUD-USD. So along this area, this is around 0.65840. So we should be expecting to see some level of resistance around that area here. So perhaps a very short-term bullish momentum is expected in AUD-USD for the day. So on Tuesday, we were looking at a bounce from the lower trend line towards the upper trend line. This played out well. So today, we don't expect much. So perhaps further rally towards this area here. So New Zealand USD, we expected the market to bounce from here, get back to resistance. And now we have a very familiar pattern, a breakout, retest, continuation. So breakout happened here yesterday, market pulled back downwards. Now the new target is 0.60466 as the market continues in that direction. So USDN, this is where we had the big question about the dead cat bounce. So it seems that things did not play out on Tuesday as we expected. So my expectation was that the market would find resistance here and continue downwards. So as I always say, sometimes my calls can be wrong. And that's completely okay. So you don't have to take my words into your trading. So you still have to do your own due diligence. So in this case, I expected the market to drop back to the previous low. Didn't play out. We had a further rally happening yesterday, but now it seems like the rally is weakening. And now the idea that the market goes back downwards might be playing out later today. So I expect to see some further weakness in the dollar against the yen, where the market could potentially drop to 141.678. So we saw a triangle happening in silver yesterday, with a breakout happening on the lower side, a retest playing out here. So if I was to remove the triangle here, don't know how to highlight this. Just give me a sec. So this was our triangle, basically indicating some form of consolidation happening in silver prices. So a breakout happened yesterday. So we saw this playing out. Market went back up to the trend line, and now we are expecting to see some further downside momentum happening in silver prices. So this seems like the likely direction for silver. For gold, we are seeing more of a consolidation. So this was a sideways momentum, or what we describe as a range. Didn't play out as expected, but now we have a vision of what might be playing out in gold. So with this serving as the upper trend line, and then for the lower trend line, we are seeing more of this. Then we can accurately say that gold is trading in a range, and at some point we should be expecting to see a form of breakout, either to the upper side or to the lower side. So gold being particularly weak, there's quite a number of things to consider. One, the prevailing trend, which has been a bearish momentum. So if you go to the weekly chart, this week has been pretty weak, and prices have been strongly moving downwards. So if you go to the 1 hour chart, then you can see Friday, Monday, Tuesday being pretty bearish, Wednesday more of sideways, and today an attempt to move higher is now being met with prices moving downwards. So for any intraday short-term trader, you should be looking at a drop to this area here as a potential intraday trade, with the better trade being when the market eventually breaks out, either from the upper or from the lower trend line. So for US equity indices, we also predicted a dead cat bounce on Tuesday, that the market would rally, get to this point, and then drop. Then on Wednesday, the market went ahead to form a new high. But then what we are seeing here is the market basically forming a very strong drop. So if you go to the 15 minutes chart, then the overall criteria or idea shows that the market was moving upwards, forming higher highs Monday, Tuesday, Wednesday. And now we have a breakout towards the lower side, indicating that even the higher lows have been broken. And this happened yesterday in the afternoon. So if I remove my earlier trend lines here, this was the overall momentum. So what we have seen here is the market making a strong break here, a pullback for a while. This was during the Asian session, and now we are seeing signs of a continuation, where now the new target becomes the previous low that we had seen on Monday at 5,090 for the SP 500. So from the 1 hour chart, this is how it looks like. So I expect this bearish momentum to continue. So for the Nasdaq, it's still the same thing. So our projection wasn't wrong. Maybe perhaps it was too early to call it, but what we are seeing is the same idea playing out. So in this case, what we are looking at here is a market that was basically facing resistance along this area here. If you look at the support area, I would say it was along this area. So this has been the overall momentum in the earlier days of the week. And now we had a breakout happening yesterday in the evening. So this was a big drop. Market bounced from this area, went up. And now the expectation for today is that the market continues with a bearish momentum and gets to 17,239. So for the Dow, same idea playing out. So these indices can be quite correlated. So you might find that the patterns are similar. So just because we analyze the Nasdaq, Dow, and the SP 500, it doesn't mean that you go for all the three positions. This would be extremely risky. So you identify the one that works best for you, and then select one rather than going for three different positions, which basically increases your risk. So in this case, it seems to be the same pattern across board, and now the Dow seems to be the one ahead of the curve. So we could be seeing some further drop to 38,383. So Brent oil still remains within this bearish trajectory with a strong bearish momentum. But for the better part of the week, we have seen Brent oil attempting to make a comeback. So Monday, Tuesday, Wednesday has been pretty bullish. So right now it's indicating as if Brent oil is moving further back downwards. But then as we understand this cycle, we are looking at a market bouncing from this low, headed towards this upper side on the upper trend line. So perhaps this could be a bad play indicating that the price is moving downwards, as at this moment. It's more likely that the market will continue with this pattern and get towards the upper trend line. So Bitcoin has really struggled. We saw the rising wedge playing out here with a breakout happening here. So we had a breakout here. So market found support, went back upwards. So in this case, we are seeing a potential from a technical perspective for the market heading back lower, especially with the expectation with the US equity indices. So we could be seeing a further retest of the 54,573. Remember, for the longer term expectations, I expect to see Bitcoin moving further upwards. So while we might be seeing this bullish recovery from the bottom that we saw about 4 days ago at 48,947, I expect Bitcoin to completely make a full recovery. But for now, from a technical perspective point of view, it seems more likely that Bitcoin could be taking some further step backwards. So European equity indices, here we have the Spanish index or the IBEX 35 index. So after the strong rally that happened on Tuesday and Wednesday, so yesterday in the evening, followed by today's morning, we are seeing some further downside momentum. So if I was looking for a trade today, I would be looking to be shorting European equity indices. So there's a good chance we should be seeing the Spanish IBEX dropping further back downwards. So very strong drop here, followed by a very strong bounce and then a continuation. So this seems like the likely idea for the day. So for the Euro stocks, the cut bounce didn't play out on Tuesday. So now looking at a smaller time frame, the 15 minutes chart for this one, this is what we are seeing here. The market following that path as the support area, resistance, and now this as support, and now a potential break below this trend line would imply that we are going short. So you observe this chart to see if there's a breakout, and if the breakout plays out, then that's when the idea plays out to go for a short selling position. So for the UK, we speculated on Tuesday that the market would find a resistance here and drop. Played out well, though it didn't quite get to the target. So some further bullish momentum on Tuesday, Wednesday. And then if you go to a smaller time frame, in this case, the 15 minutes chart, then it seems like this is the likely idea and it's playing out across board. So I'll try and remove the previous analysis and now focus on what we are seeing here. So if this be the support, then the idea is to look for a breakout. So remember, this analysis could be wrong. The market could potentially bounce from here and then head higher. So this is still a potential play. But then the idea in this case, given the weakness we are seeing in the equities market, is that the market breaks and gets to the previous low. So the plan is basically to observe the price action around this area. So French 40, same thing. We are seeing a very strong bearish momentum happening this morning. So in this case, if you observe the trend line, I would say that this was the sequence of higher highs. We have also seen a sequence of higher lows. So if we are to draw a trend line here, we are just very early. Sorry for that. So we are still in this sequence here. With the idea that the market may eventually break the lower side here. Sorry for that. So now we are seeing the same thing happening. The German stock market index showing some signs of what might look like a range, but to be honest, it's more of an inverted flag. So if I go to the 1 hour chart and then I zoom, sometimes after a big market move, such as this one, you might see the market consolidating and forming a flag before making a continuation. And in this case, we have our flag here. So if this is our flagpole and this is our flag, then the expectation is for a continuation. And now the continuation might play out later in the day. So right now it seems like the market is recovering, but the overall expectation on my side is that the market continues with the drop and potentially gets to the 17,000 price level. So that's it for the day. I'll be checking on the questions that you guys may have, try to answer before we end the session. So the first question I'll be addressing was raised by James Kamau, and this is about euro trading against the Australian dollar. So I don't know what you saw in this pair, so let's just check it out. I haven't checked it out this morning. So this is the euro trading against the Australian dollar. Clearly, euro has been pretty strong. So we have seen a very strong bullish momentum happening in the euro. So if you do a daily time frame, then this is pretty clear for everyone. So this is the highest price that we saw, perhaps a multi-year high. Then from the forward chart, you can see that the market erased all those gains immediately. From the 1 hour chart, this is how it looks like. So we are seeing some level of support being somewhere along these lines. Whereas we have also seen some level of resistance along these lines, with the exemption of the extreme volatility that played out here on this particular day, which was on Monday. So right now, the real question is what's happening here. So try and insert a key indicator. This doesn't tell you where the market is headed, just shows you a sequence of highs and lows that have played out in the previous cycles. So I'm looking for a zigzag. Just give me a sec. Yeah, I found it. So this is what's happening in this chart. You can see the sequence up and then down, all the way up, back down, up, down. So right now it seems more of a sequence where the market is now moving from the upper trend line and down towards the lower trend line. And perhaps we could be seeing the market bouncing from this area and continuing with the pattern. So very short term, I don't expect much to be playing out in the AUD-USD currency pair. So next question is from Tapscared. What's the most promising pair to trade today? From what we have checked out, I would say the Spanish index seems more likely to continue with the bearish momentum and get towards the bearish or the bottom that we saw on Tuesday around 10,302. So that's on the indices side. So also, given the weakness that we are seeing in the dollar index, then the USD JPY might be a nice play, looking for further bearish momentum. So we have seen this playing out. And if you are checking on the price action yesterday, let's give this a try. We had this. It was a triangle. Market made a breakout towards the upper side. And then now we have this. I would say the market is forming this seemingly rising wedge, and potentially we could be seeing a break. So we don't have a breakout yet. So in this case, I would be on the lookout for a breakout. So there is a good potential that this breaks out to the lower side. The dollar continues with the weakening here, and the yen continues strengthening. And we could be seeing a breakout happening here, and potentially a drop all the way back to the previous bottom that we saw on Monday. So that has not happened yet. So it's a wait and see kind of scenario. For gold, the market remains within the same pattern. So perhaps a drop further towards the lower trend line here. So for Brent oil, we are seeing some further bullish momentum. So in this case, upside potential. The story of the week for Brent oil, from Monday, further Tuesday, Wednesday, then today we could be completing the journey and potentially get towards the upper trend line. So I'm pretty bullish on Brent oil today, especially after former US President Trump mentioned that the US needs to recover all the sales that were made in the US strategic oil reserve. Basically adding pressure on the US government to buy even more oil to restock its reserves in the market. So is the sell-off over, or are we only getting started from the carry trade? I believe that a good proportion of the carry trade has been unwound. Remember, it's a reverse carry trade. Make sure to check the session we did on Monday. It's available both on my X. It's also available on my on FX Pesa Twitter handle. It's also available on YouTube. So make sure to check it out. What we discussed on Monday, what's happening with the carry trade, why the reverse is happening, and it seems more likely that the reverse is continuing. So we should be looking forward to more price action this week as well as next week as investors look to unwind those positions. So I already did the Australian dollar on this presentation. So another question, magnitude 7.1 earthquake hits Japan. Can this affect the market? Well, I saw the news about the earthquake. I don't know how much impact it has had on the economy itself. So we would have to assess how it has impacted Japan as a country before looking at how it impacts the markets. So one key thing to notice is that big earthquakes are not very new to Japan. So it's not like a major country happening to have a major earthquake. For Japan, they get regular earthquakes. So we'll be looking to see and understand what's currently happening. So US 500, we have already covered this. We are looking for some further bearish momentum. So it's an inverted flag. So just think of a flag and then invert it upside down. So big bearish momentum, market trades inside a flag for 3 days, makes a breakout, and today, Thursday, headed into Friday, we could be seeing some further bearish momentum headed towards the previous low as the market looks to form the next leg in the bearish momentum. So overall, I expect to see some further downside momentum playing out in the SP 500 for the day. So I believe that was the last question. Are we expecting major news today? Good question. So I don't think there will be any major news today. From what we are seeing in the economic calendar, nothing much. So as I mentioned earlier in the week, so it's a pretty simple day. The only news we are expecting is 3:30 p.m. US unemployment claims, where I mentioned that an increase in unemployment claims will pressure the Fed to cut interest rates, which is positive for the dollar. So a higher number than 241K should be positive for the dollar, and a much lower number from 241K should be negative for the dollar. So that's all we're expecting for the rest of the day. Also keep an eye on the tension between Iran and Israel. It could lead to a big reaction in the markets, especially if the Iran was to retaliate against Israel. So last question was USD card. I don't know. I'll try and do this. So dollar trading against the Canadian dollar, we are seeing this triangle playing out here. So we saw the market make a big extension towards the upper side. So from the forward chart, this is how it looks like. So the dollar was pretty strong against the Canadian dollar. And one of the reasons that this was happening was because oil prices were pretty weak. So in what looked like a head and shoulder pattern, where if you understand head and shoulder patterns, then you know that the market went for this high, formed a shoulder, went back downwards, formed a neckline. The black line is our neckline here. Then the market extended the rally, went all the way up, pulled back downwards, and then went up to form the other shoulder before breaking out towards the lower side. So the breakout was formed, there was a retest and a continuation. And since then, all we are seeing is a consolidation. So as I mentioned, a potential break below this triangle would be our trigger to go for a short selling position. So the break hasn't happened yet. So we'll be observing the market later today to see whether there is a continuation of this bearish momentum. So oil seems to be pretty strong and making a strong recovery. So in this case, we should be expecting some further downside in the dollar trading against the Canadian dollar. So that's it for the day. Thank you very much, guys. Thank you, everyone. I'm seeing a lot of repetitive questions. The question on US30 is something that I've already covered. So also a question from Lamik Buire. So did the emergency Fed meeting happen? No, it did not play out. What we saw was an emergency Bank of Japan meeting. They haven't spoken much, but they are calling off the rate hikes until the market stabilizes. So we saw the Bank of Japan making an emergency meeting with the Ministry of Finance in Japan. So as for the Fed, we'll be looking forward to see more updates from the Fed. But of course, if the bearish momentum in US equities continues this week, then that emergency meeting could be in play. So it hasn't happened yet. It hasn't been announced. It's only that the market is having a high expectation that the Federal Reserve will be looking to react to what is currently happening in the markets this week. So thank you very much, guys. Thank you for your time. Remember to check out the latest episode of the Bullish Banter podcast. It's available on YouTube as well as on all podcast platforms. We also have new episodes on the Financially Incorrect podcast. So if you're looking to begin your trading journey, check out the Novice to Pro series available on the FX Pesa YouTube channel. Also, remember to register for an account using the links in the description below. That is on YouTube. If you are watching this on X or Twitter, make sure to check out the FX Pesa handle and register for an account. It's free of charge. You sign up, get ready. You'll get a demo account, which allows you to trade using paper money. And once you understand how the platform works, then perhaps you can now go live and start trading your own money. So that's it for the day. I hope you guys have a wonderful day, and make sure to protect your account at all costs. And this means practicing proper risk management. Thank you very much, guys. See you then.